Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. Crypto this week. Bitcoin ETF approval. That's kind of what's been the big driver of all the bullishness on Bitcoin, right? So you can see Bitcoin has been the leader. So this latest crypto move has been driven primarily by Bitcoin. That's where you've seen the most flows. That's where you've seen the best price action. So definitely leading the way. CME Bitcoin futures have been trading at a bit of a premium over Deribit. And that's an indication that institutions who are the users of those CME futures have been buying in anticipation of these ETF approvals, which I believe the deadline is next week, around the 18th of October. If they get those approvals, then the idea is that you're going to get a load more inflows into Bitcoin, basically. So you've got some institutions and funds who've been front running that have been buying up those futures. And now you've seen the spread actually converge a bit with other exchanges like Deribit, suggesting that the rest of the market has now caught up with that view, and the market's kind of all in agreement that it looks like these approvals, the probability of getting these approvals is pretty high, right? Market's probably pricing in a good 75, 80% plus probability of getting these approvals next week. Okay. So that's one obviously very bullish piece of news and anticipation in the market. Bank of America weighed in with a big old report on digital assets saying the space is too big to ignore. Similar to us, other banks that we've seen put out reports, whether it's UBS, whether it's Citibank in recent months. The Biden administration apparently is weighing the issuance of an executive order on crypto. So a sign there that the White House is taking crypto markets seriously as well. And the market's not seeing that as something negative, like they're going to come and put some major restrictions or whatever. It's more about them kind of facilitating the growth of the space, arguably, right? And giving some clear guidance and rules on how people can go and operate in that space, right? That's kind of how it's being read, I think, by the market. Yeah. And then the last sort of positive narrative that I saw out there was, the decorrelation between equities and crypto that we've seen over recent weeks, where S&P's just been trading weak, tech's been weak, and Bitcoin and crypto are just rallying. I mean, that kind of adds fuel to the case that institutions should be allocating some money into crypto because it offers some form of diversification, basically, right? Certainly against maybe this kind of stagflationary backdrop, maybe that has certainly come about over the last few weeks. In terms of the investor psychology, maybe crypto is a good hedge against that environment, right? That's kind of certainly how it's behaving. Personally, I think more of this move and this decorrelation has been because of the whole ETF approval and the timing of that approval. If we were to get some big risk-off move in equities led by, let's say, the China situation worsening, do I think crypto would escape that? Hell no, right? Personally, I don't think it would. So I think it's been more coincidental, this kind of period of decorrelation. However, some people think, maybe there's actually other reasons for it, and it adds to that kind of diversification, asset allocation case into crypto and away from maybe things like bonds or whatever you might be using to diversify your portfolio, basically, that are certainly not a stagflation hedge, basically, right? I imagine. Yeah. Okay, so that's the main sort of headlines that I've seen going around in crypto. In terms of the on-chain stuff this week, for me, the highlights of that, I'll show you on these charts. So long-term holder supply to issuance ratio. So obviously, the on-chain stuff's pretty good. You get a feel for like the hodling behavior, how long people are holding onto their coins, accumulation, all that sort of thing. But this metric's quite cool because it basically looks at the hodling in terms of number of coins accumulated or whatever, and then divides it by the issuance, right? How much is being mined and things like that. And it looks at that ratio. And so that's what that pink line, right? So it's a bit of an oscillator, right? A pink line is an oscillator, and it's the ratio of long-term holder accumulation divided by issuance. And what you can see there is when you get big drops down in that ratio, that's showing you that the long-term hodler community is letting go of coins, okay? And in quite a large, in terms of a ratio, like it's letting go of, 20 times the daily issuance basically of Bitcoin. So when you see big run-ups in price and you see that ratio dropping, that is usually giving you a sign that this is like a blow-off sort of move and you're going to get a correction in the not too distant future, basically, right? That's how I read it. So the idea is that whilst we're getting this, when we're not really gone parabolic in price yet, right? We need to break through the all-time highs. Maybe we head towards 80K, whatever it is over coming months. If we do head towards 80 to 100K and we see a drop in that pink line, and that means long-term, we start to see the long-term people letting go, then that might be the kind of reason to get cautious and start to put some hedges on, basically, right? Because that's kind of the precursor to the major correction that you might see, after that. All right, so that's what I'm looking for, and that I'm going to be keeping an eye on that metric, basically. And then other things that the on-chain stuff was basically showing us, entities and active addresses have been rising with the market, but they're yet to accelerate to levels seen in the last bull run about a year ago. Obviously, we've said about the rates of accumulation. Futures and options open interest has been rising quickly. So you're seeing a bit of leverage and speculation coming back into the market. Obviously, we saw that happen sort of before the September sell-off. And we still saw some downside liquidations happen pretty quickly. Obviously, you probably need some sort of news catalyst for that. But imagine we didn't get the ETF approval next week. You're getting some sharp correction then, right? Because you've got speculative positions built up to play that news flow. If you get the wrong news flow, then what's going to happen to those longs? They're going to get crushed, right? So be aware of that and know that risk is there of a relatively sharp 10, 15% pullback if you don't get the news you're looking for, basically, right? So that's what I would be keeping an eye out for. Another thing kind of to watch out for is this sort of funding spread on perpetual futures. So you see here, you've got whenever that's kind of in the green, that's a positive funding spread. So longs are having to pay shorts. And so now back in sort of Jan, March, that got really high. So that was showing you a massive, massive speculative longs. So that was obviously kind of be careful, right? A sign of being careful. Here, these numbers are very marginally positive. So still quite a ways to go before we get into those Q1 sort of funding levels, right? So but having said that, we had a pullback in September and funding levels weren't a million miles away from where they just got to recently, right? So this might be some fragility building and just something to be aware of, basically. Yeah. All right, so that's kind of on-chain, what I'm seeing in on-chain. In terms of vol analysis, let's go through that. So what am I seeing in vol? So realized vol, even though we broke higher last week, we broke through that 52, 53 area, and we went pretty quickly to 56, 57, we then stabilized. So even though you had a flash in the pan move and realized, it didn't persist, basically, right? So if you look at kind of 7-day realized here versus implied, fairly widespread again, more than 20 vols. Same story on 30-day. You got implieds at 80 with realized at 66, right? So not seeing, still seeing quite a wide implied realized gap. So, gamma not really performing that spectacularly, okay? So then, on the back of that, you wouldn't be surprised to see the term structure in contango. So if we have a look at what the term structure has done over the last week, brown was a week ago, green is today. So you're seeing that front end still relatively, depressed. The super short dated around 70, end of October stuff around 80. But look, if you see what's really got hit the most in the last week, it's that December expiry, right? Which was trading relatively expensive. And finally, people have come in and smacked that basically, right? So it's gone down from 90 to around sort of 84, 85, which is a reasonable move in a week for that deck vol. Okay. So that's what we're seeing there. Skew is quite interesting. It's been quite volatile, skew. So, skew in Bitcoin and in crypto in general is quite volatile, and it kind of moves with spot quite a lot. So if we bring up all the maturities, you can see here. So what's been happening with skew? So we started the week with a relatively neutral skew on the 1 month. Puts were bid for the 1 week, and then everything else was kind of calls. You then had, early last week, we kind of came in to everything trading for calls as the market was breaking to the upside. So no one wanted puts, basically. You then had the market calm down and puts go crazy bid, back to 8 vols over on the 1 week. And you're seeing that kind of hold, right? Where 1 week puts are trading 6, 7 over, 1 month are trading about 5 over. And even the 3 month, which is quite rare, but the 3 month has flipped now for puts. Okay. So even as the market is kind of at the highs around 57,000 on Bitcoin, we are seeing puts going relatively well bid, despite the market being at the local highs. That is often a precursor to a reversal in spot, basically, right? When you see skew doing something the opposite of what the direction of spot is, that can be a bit of a leading indicator that things are getting a bit tired, basically, right? So I would be cautious. If you've been long Bitcoin and you've done well, know that this major catalyst and this major anticipation for the ETF approval next week has been the reason we've gone up here. And the question now is that going to be a sell the news event, right? Is it how much more do we rally even if we get the approval, right? There's probably a lot of people who have bought the market for that approval. Are there going to be a certain percentage of those people who are going to let the futures go once that news hits, basically, right? So certainly, maybe that put bid is coming from people who have bought the market who are super bullish on that approval news flow, but know that if the approval doesn't hit, market's going to tank, and they're buying puts to protect that scenario. Basically, there might be some of that as well. So it doesn't have to be massively bearish. It could just be people are cognizant that in the off chance that the approval doesn't hit, then it's going to lead to a pretty quick collapse. And so, yeah, it's prudent, given that put skew isn't trading crazy expensive. Maybe it's prudent to buy some puts against your longs, basically, right? That's kind of the sort of flow that we're seeing in skew, I would say. Yeah. Okay, so that's kind of what I'm seeing in skew on Bitcoin. In terms of what I'm seeing in Ethereum, the only real difference is, Ethereum realized vol's been particularly weak, right? Usually Ethereum realizes anywhere between 10 and 20 vols above Bitcoin. Hasn't really done that recently. Obviously, this move has been much more led by the likes of Bitcoin. So if you look at what realized has been, realized on Ethereum on a 1 week basis is like 38, as opposed to Bitcoin at like 50, right? So realized really collapsing on Ethereum, right? So makes sense that the impliers have been under pressure. And, the spread between Bitcoin and Ethereum vol normally trades at about, 15 vols Ethereum over. That has converged a bit. So it still trades over because there's going to be some kind of bid for Ethereum because people just have a memory that Ethereum is a higher beta asset and are willing to pay a bit more for that vol. But in the short term, it's just not working being long Ethereum vol relative to Bitcoin vol. So that spread's converged to about 9 vols in the front and maybe about 12 vols sort of in the December bucket. Yeah. So, that's probably still got a bit more room to come in. If you look at the spread between Ethereum and Bitcoin, it's been under pressure. So you can see here, this is the Ethereum Bitcoin cross. It's broken down some levels. 0.065 was a bit of a support zone. It broke it. Next major area of support's coming in at 0.055 to 57, which is arguably another 5 to 7% underperformance of Ethereum. Which way are we going to get that? On the upside or downside? Who knows? If we got a pop in Bitcoin up to 60K and Ethereum didn't participate, then we'd pretty much be exactly at that support level in the spread. And maybe that would be a time to dip your toes in and maybe buy some Ethereum if you thought, you know, the Bitcoin will hold its level at 60 and then at some point Ethereum's going to catch up. But at the moment, in the absence of a catalyst for Ethereum, all of the kind of excitement and the flows are kind of gravitating towards Bitcoin, and Ethereum's kind of stuck in the doldrums a little bit at the moment, right? I do think it will catch a bid later in the year, certainly towards, you know, year end and maybe looking into Q1 where people are talking about the positive catalyst on terms of 2.0 and all that stuff. But the timing on that is pretty fluid. So you kind of need to wait and see, get some more sort of clarity on dates on that front. I don't think the market really knows that at the moment. Yeah. And that's kind of it. I mean, in terms of flows in the options market, it's been pretty mixed. You know, there's been some short-term put buying, like I said. Once that put skew got pretty flat, there's been call spreads and put spread buying in like the December area. I do think, you know, the biggest open interest within Bitcoin does seem to be in the December bucket. So if we look at this page, it's quite a good one to keep an eye on. You see the open interest by expiration. So you've got a bit of a pop in October coming up at the end of this month, but the majority of the flow majority open interest resides in December. And then if we home in on the actual December expiry to see where the strikes are, well, there's quite a lot of volume on this 100K area, 200K, and these 60K, 70K, 80K areas, right? So I would say the flows that I've been noticing or I've seen, you know, and the trades that have made sense as well have been to be long call spreads in kind of the 70 long strike, 70K, short strike, 100K, that type of trade. So I think there's a fair amount of flow that's been in that December call spread area. So that's kind of probably the trade that people have got on to play that year-end rally, basically, right? But nothing really to sort of say in terms of that's not really got any predictive value necessarily, and we're too far away from that to even contemplate like if it's going to have any pinning effect or anything like that. But it's just, you know, if you're looking for ways to get long this market, I think those sort of call spread structures do make a lot of sense. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.